Today, we're getting into something that might make your palms a little sweaty and your calculator cry, building a home buying budget. But don't worry, I promise this will not be as painful as the time I tried to explain cryptocurrency to my grandmother. So let's start with a bizarre little fact. Did you know that in the 1900s, some Americans literally bought their homes from catalogs? Sears sold over 70,000 mail order houses between 1908 and 1940. Just imagine Amazon Prime delivering your house. Unfortunately, Prime's two-day shipping was not around back then, and you had to wait for your house to arrive by train in about 30,000 pieces. Actually, I don't know how many pieces it came in, but I'm guessing it was a lot. But today, we are not here to build a house. We are here to build something equally important, your home buying budget. And trust me, this is one area where you do not want to wing it. First up, connect with a lender. Really, we're already going there. Before you start dreaming about quartz countertops or browsing Zillow at 2 a.m., connect with one of our Home Buying for Women lending advisors. They're like your personal finance GPS. They'll tell you exactly where you stand and how to get to where you want to go. Plus, they have access to a comprehensive list of loans and grants you might not even know exist. Trust me, finding out you qualify for a special program feels better than finding money in your old winter coat pocket. Your lender will help you understand how much home you can realistically afford right now. And if that number makes you want to crawl under your desk and stress eat cookies, don't worry, they will create a roadmap to help you qualify for a more expensive home if that's your goal. Maybe you need to boost your credit score, or maybe you just need to wait for that promotion you've been eyeing. Either way, you'll have a clear target to aim for. And hey, you might say, hey, I think it's too early to talk to a lender. I'll pass. You know, I hear this a lot, and I totally understand that hesitation. But here's the thing. Talking to a lender early is actually one of the smartest moves you can make. And here's why. First, it's like getting a sneak peek at the game plan. A lender can tell you where you stand right now and show you exactly what moves to make to get to where you want to be. Maybe you're closer to being ready to buy a home than you thought, or maybe you need to work on a few things. Wouldn't you rather know that now instead of after you've fallen in love with a house that's not yet in reach? Think of it this way. If you were planning to run a marathon, you wouldn't wait until race day to figure out how far you can run, right? You'd want to know your starting point so you can train effectively. A lender is like your financial fitness coach. They can look at your current situation and create a custom training plan for your home buying marathon. The best part, this conversation is free and doesn't commit you to anything. You're not signing up for a mortgage, you're just gathering information. And the earlier you start, the more time you have to work on any improvements they suggest, whether that's building your credit score, paying down specific debts, saving the right amount for your down payment, understanding which loan programs you might qualify for, discovering grants or assistance programs you didn't know existed. Plus, in today's market, having this conversation early can give you a serious advantage. When you do find that perfect home, you will already have a relationship with a lender and understand exactly what you can afford. That means you can move quickly and confidently when the right opportunity comes along. Remember, lenders aren't just there for people who are ready to buy tomorrow. They are there to help guide you through the entire journey, whether that journey takes 3 months or 3 years. The earlier you start that conversation, the more prepared and confident you'll be when it's time to make your move. Your lender will help you decide on the down payment you plan to put down. This is the chunk of money you'll need up front, and it's typically between 3% and 20% of the home's purchase price. Now, I know what you're thinking, Jennifer, that is a really big range. And you're right. It's like saying your coffee might cost anywhere between $2 and $12. Oh, wait, that is kind of what coffee costs these days. But seriously, here's why the range is so big. FHA loans can go as low as 3.5% down. Conventional loans usually ask for 5% to 20% down, but there are some that go as low as 3% down. VA loans might not require any down payment at all, and the same goes for USDA loans. And there are financial advantages to putting more money down when it comes to a monthly payment, so some people do choose to put more money down and finance less. Your lender will be able to give you a good idea of the closing costs you'll need to pay on top of your down payment at closing, so you know exactly the financial target you're aiming for. Now that we have an idea of what we need to save, let's break down how to create a budget that actually works. And I promise by the end of this video, you will understand why this is less about restriction and more about giving yourself permission to spend on what actually matters to you. Step 1, track your income. This is your starting point, and I mean all income, your regular paycheck, that side gig where you walk your neighbor's incredibly spoiled Persian cat, that extra cash your grandmother still gives you for your birthday. Step 2, list your fixed expenses. These are the non-negotiables. rent, utilities, insurance, and other bills that show up regularly. Write them all down. Here's where it gets interesting. One study found that participants underestimated their monthly expenses by 15.5%. It's like we all have this selective amnesia when it comes to recurring bills. So do yourself a favor and pull up your last 3 months of bank statements and credit card statements. I have a link to a spreadsheet you can use to log everything you're spending so you can get a sense of where all your money is going. Trust me, future you will thank present you for doing this. Step 3, list your variable expenses. So we're talking food, entertainment, shopping, all those times you've told yourself, I deserve this at Target. And you know what? Sometimes you do deserve it. The key is being intentional about it. So to complete steps 2 and 3, do yourself a favor and pull up your last 3 months of bank statements and credit card statements. I have a link to a spreadsheet in the show notes. You can log everything you're spending and get a sense of where all your money is going. Trust me, future you will thank present you for this reality check. Step 4, choose your budgeting method. There are tons of ways to budget, but let me share my 2 favorite. There's zero-based budgeting. Think of it like Tetris. Every dollar has a job, and your goal is to make everything fit perfectly. It's oddly satisfying, like watching those videos of people organizing their pantries. You know the ones. And let me break down zero-based budgeting because it's actually pretty fascinating. Imagine you make $4,000 a month. With zero-based budgeting, you're going to assign jobs to every single one of those dollars until you hit zero, and I mean every single dollar. So here's how it works on a $4,000 income. Let's say the rent's $1,500, utilities are $200, groceries are $400, and your transportation is $300. Then you've got the emergency fund of $500, entertainment of $200, savings for that vacation of $300, your phone bill of $100, insurance at $150, and miscellaneous at $350. So the total assigned is $4,000. The magic happens when unexpected expenses pop up. Let's say your best friend announces their destination wedding in Hawaii. Instead of panicking or reaching for your credit card, you become a money choreographer. Maybe you'll reassign $100 from entertainment and $300 from your vacation fund to a new watch my friends say I do while I get sunburned fund. The beauty of zero-based budgeting is its flexibility. Unlike traditional budgeting where you're trying to stick to rigid categories, here you're actively deciding where every dollar goes each month. Had a huge electric bill this month? Time to do some money musical chairs. So let's see how this works in real life with something big like saving for a house. Say you're aiming for a $20,000 down payment in 3 years. That's about $556 a month. Still a chunk of change, but way more manageable than you might think. Let me show you how to make those numbers work. Let's break down that $4,000 monthly income again, but this time with home buying as our priority. First, your non-negotiables. So the rent, $1,500, utilities, $200, groceries, $400, transportation, $300, insurance, $150, and your phone, $100 for a total of $2,650. Now this is where zero-based budgeting gets interesting. You need $556 for your house fund, and you have $1,350 left to assign. Suddenly, this feels a lot more doable, right? Time for some strategic money assigning. You might decide your house fund at $556. Your emergency fund is $294 because life happens and now you can actually save for emergencies. And maybe entertainment is at $300 and look at that, you can still have a social life. So you put about $200 towards miscellaneous and this brings your total to $1,350. And here's where it gets fun. Every time you get extra money, a tax refund, a bonus, that $20 from your aunt who still sends birthday cards, well, it gets a job in your house fund. Found $50 in your coat pocket? Send it to the house fund. You can set up a separate savings account or Online Bank Ally allows you to create buckets for savings. And you can name them whatever you want. Name yours something motivating like Goodbye Landlord Fund 2025. It's like naming a pet. You're more committed once you give it a name. And while there are plenty of fancy apps out there, don't feel pressured to use them. Writing down your budget by hand can strengthen your connection to it, making you more likely to value and stick to it compared to one created through an app. This phenomenon, called the IKEA effect, refers to our tendency to place greater worth on things we've had a hand in creating. Now, in all this talk about saving for a home, I do want to emphasize the importance of creating your emergency fund. This is your financial umbrella for when it rains, and trust me, it will rain. Aim for 3 to 6 months of expenses, and here's a lesser-known tip. Keep this money in a different account from your regular checking account, making it more difficult to access, so you have to be extremely intentional before you touch the money in that account. Now let's talk about what nobody tells you about budgeting. It's not about perfection, it's about progress. Your first budget will probably be as accurate as a weather forecast. You'll forget things, underestimate some expenses, and probably have a category called miscellaneous that somehow keeps growing like a mysterious fungus. But here's the real secret: the magic isn't in the numbers, it's in the awareness. When you start budgeting, you start noticing patterns. Maybe you spend more when you're stressed, or perhaps you're dropping a surprising amount on food delivery. No judgment here. At one time, my own coffee budget could have probably funded a small country. And before we wrap up, think about checking your budget regularly. Look at your budget as a fitness tracker for your money, except this one won't shame you for sitting on the couch all day. If you keep your budget top of mind, you are more likely to stick to it. And remember, a budget is not a pair of handcuffs. It's more like a GPS for your money. Sure, sometimes you'll take detours, but at least you'll know where you're going. And isn't that better than driving around financially lost while your budget keeps trying to recalculate? And hey, if getting your budget together so you can start saving for a home feels like this big, overwhelming thing, you are not alone. There's a lot of noise out there, competing advice, complicated steps, and 100 different ways to second guess yourself. But here's the good news: you do not have to figure it out all by yourself. That's exactly why at Home Buying for Women, we offer free one-on-one financial coaching, a space where we meet through Zoom, talk through your specific situation, and create a plan that actually makes sense for you. In our first session, we'll set expectations for the coaching process, map out clear steps based on where you are right now, and give you simple, doable goals each time so you can move forward with confidence. There's no pressure, no sales pitch, just real personalized guidance to help you get from thinking about buying a home to actually making it happen. If that sounds like something you could use, just go to homebuyingforwomen.com/coaching to schedule your first session. If you found this video helpful, don't forget to like and subscribe. And hey, leave a comment below telling us your weirdest budgeting category. Mine's emergency ice cream fund. Don't judge, we all have our priorities. If you want more encouragement or home buying tips, keep watching for the next video. Together, we can make the dream of homeownership a reality. You can do this, we'll be your guide. Bye now.